If we jump over to vol, so as I said, realized vols just continue to grind lower. It's in the low 20s now for ETH and Bitcoin, which makes it less volatile than most commodities like silver, like nat gas, uranium. All of those are more volatile. Even Chinese stocks, the FXI is more volatile than crypto right now. Large cap crypto, that is. Implied vols were also crushed into the weekend, which is pretty typical as we tend to see that selling flow. But you can see they've had a bit of a pop. They kind of bottomed out at the weekend, and they've had a pop after the curve news. That pop has brought some positive carry back in there as well. So as the carry was starting to get squeezed out, it has moved back to about 10 vols. So plenty of room for the theta harvesters, the gamma sellers to come in, go after that 10 vols. And the point being that 10 vols as a percentage of the implied vol is now quite juicy. So when vols were at 70, a 10 vol carry is you're only looking at 15% of the vol level. When the vol's at 30 and you've got a 10 vol carry, there you're looking at more than 30%. So it's quite a lot of juice if you think about it that way as a percentage of the vol. So it's not surprising that people are still out there selling gamma in force. Anyway, that's kind of what's going on in Realize. We've got ISMs, we've got non-farm payrolls this week as well. We may see some volatility in the dollar, but if crypto markets, they do seem to be pretty insensitive to macro swings right now. So it require a pretty big shift in sentiment to impact prices, we think, materially from here. I think a quiet summer has got to be your base case in crypto, given how the price action is evolving until the big story around ETF approvals hits the tape again and brings in some of those promised institutional flows that everyone's trying to front run. So that's kind of the thing that really we need to see to get crypto markets moving again, I think. If we look at term structure, Bitcoin term structure shifting down. August and Sep kind of the worst hit at around 3 vols. And then rest of the curve also being dragged down. So even the back end down 1 to 2. The reason why the back end just can't really escape the vol selling is because the curve's so steep. If you look how steep that contango is, right, it's hard to justify it going any steeper. And so when we stay in a realized vol in the 20s, the whole curve just shifts. And you often see that. You see that in other options markets as well, right? When the curve gets to a place where it doesn't want to steepen anymore, if vol gets sold, it gets sold across the entire curve, right? And that's kind of what we're seeing. ETH term structure not hit quite as hard. We did see a little bit of a pop in the very short dated ETH on the back of this curve stuff overnight. And then because of the concerns around like liquidations impacting the alts. But the back end vol is still under pressure and it does still trade underneath Bitcoin. So March 24, we've got Bitcoin at around 50 at the money. You've got March at 47. And you've got about a 1.5 vol discount there for the longer dated ETH, which we still think is a bit of a mispriced longer term. We can understand why it's there right now, but longer term, we don't expect it to stay there. Okay, and so on that point, the relative value, you can see we've got the back end underneath 0, we've got the front end popping a little bit and going back above. So the long-term vol, because the bullish drivers for the crypto market are coming from Bitcoin over the next 6 to 9 months, let's say, with the halving and the ETFs. That's why we've got this discrepancy and we've got this vol trading higher in Bitcoin. Now, on the long-term chart, this is going back 2 years. You can see that we are at extremely low levels here. And historically, we never stayed down here for very long. This is like the longest we've stayed down here, okay, at this tight spread level, okay? And so we think mean reversion-wise, longer term mean reversion, and vol is kind of a mean reverting type asset. You know, we do think getting into longer dated spreads makes sense, but you know, we've tried that and it's cost us a bit of money. We think vol professionals like who trade like crypto hedge funds, vol-arb hedge funds or whatever, will be looking to trade forward volatility spreads, right? And what forward vol spreads are is where you don't just buy longer dated ETH and sell longer dated Bitcoin and run it as a spread that way. You have to trade the opposite way round in the front end of the curve to neutralize the gamma. And that is a way to trade forward vol. And we think that the forward vol being priced at this level is a complete misprice. And by entering that trade and having no gamma exposure to Bitcoin or Ethereum until your front leg expires, that is the way to systematically own this vol spread. And then we think this will reprice at some point, and it could reprice as much as 20 vol points like it has done, I mean, that would get it there. And historically, it's gone to 40 or 50 before, right? So I think it's highly unlikely that we go down here to -10 or -20. And even if we do, I would expect that to be very short-lived. And so if you don't have gamma exposure to that, and you just have forward vol exposure, then I think that is the trade. If I was at a crypto hedge fund, that's the trade I'd be building into right now. Okay, so take it from me. That's what I'm calling for. Okay. Anyway, SKEW wise, we did continue to see SKEW move towards puts as the rallies kind of fizzled out, and we're kind of dripping lower, but not with any great velocity. But you know, we've got 3 month SKEW now trading closer to the flat on Bitcoin before, when it was a couple of vols last week. We still got the long part of the curve, sort of 6 months and out, 2 vol premium, 2.5 vol premium, with the whole halving narrative and stuff, going to keep that elevated most likely. ETH SKEW, same story. It is being put driven here. We can see the yellow line is ETH, so it's trading at a higher put SKEW than Bitcoin. It's actually gone quite deep in 3 month space. It's looking at about 3 vols for puts, for ETH puts over. So quite a decent shift there away from, whereas, you know, not long ago it was in calls. You know, the market's clearly lost its bullish bias. The steep curves, the super low realized vol are basically dragging down any vol premium. So you know, you might think that the SKEW coming down is a indication that the market's getting really bearish. Actually, it's not necessarily that. It's just the fading away of the call premium, because the market's going after premium, right? When the front end vol is so damn low that the risk reward of selling gamma is just not there, then you say, okay, what about long dated vol? Long dated vol starting to come down as much as short dated vol, right? We're seeing that in the parallel shifts in the curve, and now you've got risk premium in the SKEW getting crunched as well. Okay, so that's kind of what we're seeing here, where that call SKEW is now starting to normalize, come back down in Bitcoin, because people are just going after risk premium, trying to price risk premium down wherever it might be on the surface. Okay, now we do think the picture can change quickly. For now, obviously, Bitcoin's capped at 29.5, therefore calls have lost their appeal. But the minute we pop back above 30K, all the call buyers are going to come back, and you're probably going to see that call SKEW, that SKEW flip straight back to calls again in the sort of short to middle part of the curve. So and we've seen that many times this year, right? So don't be surprised if that's what you see in terms of spot sensitivity of SKEW. Dashboards are saying buy calls. I'm not ready for it yet. I'm waiting for 28K support to maybe cover some short calls that I've got on in Bitcoin, against some ETH stuff that I've got. And then just generally, like we say, we've got positive carry. It's very steep curves, but generally the strategy compass is going to sit and say buy calls, obviously. Now options volume stabilizing in Bitcoin, as vols remain low. Generally, the biggest clips we saw in Bitcoin were 29th of September, bullish risk reversals. So selling the kind of 26, 27K strikes to buy the 33 and 34K area. So those bullish risk reversals, taking advantage of the pop-in SKEW to get long. We also saw outright call buying in August 31K strikes and October 38K calls. Two-way flows in the 30K strikes, so the closest to the money stuff. That was in August and September. And then long-term calendar spreads were trading as well. General theme there was selling March 24 expiry to buy DEC 23 and June 24. So kind of spreading the Vega buckets around. We think there's been some big trades gone up in Bitcoin and ETH long end, where clients have sold March 24. And so maybe there may be people trying to get shorts in March and spread it to other buckets, basically, right? Because the March bucket's got a bit of a vol overhang there. Okay, so that's Bitcoin flows. Ethereum flows, bit of an uptick in Ethereum, not massive, but call focused as well. March 23 calls were sold in a decent clip. There was a big buyer of that, obviously, a week or two ago, covering shorts. It looks like there's some reselling going on. December, outright calls also getting bought in 23 to 2,500 call strikes. Some call calendars also getting sold, OCDEC, and September bullish risk reversals, similar story to what we saw in Bitcoin. And then directionally, we're seeing some 2,800 call spreads bought in March 24. as well. Generally, those call spreads look pretty attractive, right? If you're bullish long term, you're getting amazing leverage on those sort of call spread structures, and you're not taking a load of Vega risk in a world where vol just heads one way. It's quite a nice way to structure a bullish trade, right? In general. Okay, gamma positioning. So pretty flat. Bitcoin dealer gammas around zero, around flat. Bitcoin dealers seem to be short the upside though. So we've got this big short bar here for this week. And then we've got some August shorts up higher. So in that above 30K, we think the dealer gamma is going to flip more negative and go that way. So that may well catalyze some more volatility to the upside. Ethereum dealer gammas dropped off post expiry. It was getting a bit long. It's kind of got a bit more neutral. That positioning looks a bit different. Like it looks like dealers through all the overwriting flows have been getting hit in September, in August, in the front end, what you name it. So it seems like even in a rally, we're not really going to shake this long gamma, most likely, unless a load of new fresh buying comes in. So ETH might struggle to rally with Bitcoin in the next leg up if we were to get one, right? So not only is Bitcoin likely to provide you the bullish narrative of halving and ETF, but, or let's call it ETF approval, not only is Bitcoin likely to be your driver, you also have a gamma positioning setup where ETH's going to get kind of stuck in the mud, whereas Bitcoin's going to have shorts, and you might see more realized on the upside in Bitcoin, right? So the market's already pricing that in the skew differentials, but it seems to be quite justified right now in terms of the way things are set up. Okay, that's gamma positioning. That's the summary for this week in crypto. Thanks a lot. As always, I'll catch you guys later.